Hello everyone and welcome. So today is the 27th of June 2024 and I have some trades to put on. But before we go there, let's gonna check how the trade that we opened yesterday is going. So if you have watched the video, you remember that I have done a trade. I bought a straddle, or more specifically a call and a put option with a strike price of $62,000 and expiration date as of 5th of July 2024. You can see here right now we're losing. So we have this negative 0.0005 Bitcoin. So we're a little bit underwater, approximately $30 negative. So that's how we are going right now. So if you remember, for us to make money in this position, Bitcoin should go either up or down the $62,000. So we expect some moves in here so we can make some money. So let's see, we have a few more days, we have more than a week with this position, and I hope by this time Bitcoin has go somewhere, or I really hope that Bitcoin just goes up, right? So we can make more Bitcoins and more money. So that's the summary for the position we opened yesterday. But for today, I'm going to just switch accounts here. So I have a few accounts. I'm going to go to this one in here. But for today, I have to roll a bunch of futures that I have with expiration date of 28th of June, which is tomorrow. So let me go to scroll down here. Let me gonna open, and you can see what I have on this account. So basically I have a pair trade between the BTC Perpetual and the BTC 28 June 2024. I made some changes in here, but that's basically the pairs trade that I have in place, and I have to roll the position, this position here, the BTC 28 June 2024, because that's going to expire tomorrow. And usually what I do in these pair trades, I roll to the next month, but because right now the premium for the next months are so low, as you can see here. So if you just move over this part here of your graph, you can see the premium in percentage in dollars and the annual premium for each one of the futures product that Deribit offers to us. And you can see the premiums are very low. So I have like basically $106.80 as premium for the next week, 500 for the 26th of July, which is the next month expiration date. So expiration dates basically in the rebate, it works every Friday, but the last Friday of the month is the monthly expiration date. So that's usually the one that I roll my futures for, but because it's so low here, it's 500 right now. Just for comparison, for the 28th of June, when I rolled it last time, it was above $1,000. So it's half of what it was when I rolled my previous position. So what I'm gonna do actually, I'm gonna roll my position to from 28th of June to 5th of July, right? So that's what I'm gonna do, and I need to I need to roll 1.1847 Bitcoin, right? Not the 73.78 thousand dollars, which is the number of amount of contracts that I have, or the amount of US dollars that represents, but I need to roll these amounts here. Okay, so that's what I'm gonna roll. And there's two ways we can do this, or I have two ways to do it actually. So the first one is you can just go here to the strategy, goes to future spread, and then you have just to find the correct uh, matrix. So that would be this one here. So I can just go over here and sell. That's exactly what I need to do. I need to sell the BTC 5th of July, sorry, and purchase the 28th of June 2024. But if I do using this feature of the Deribits website, I can only sell and buy the same amount of US dollars. That's not exactly what I want. I need to buy and sell the same amount of Bitcoin because there's a premium difference between the two products, right? I don't want to sell 73,780 futures price on 20th of June and purchase the same amount on July. I want to purchase the 1.1838 bitcoins in June 28, sorry, with expiration date of 28th of June, and purchase the same, or sorry, sell the same amount for the next week. So that's what I want to do, and that's not really possible doing or using this feature over here, right? Because I can only sell the same amount of contracts, okay? But it's a good gauge because you can see it's quite good right now. Essentially, the market price is 93 and we could sell it for 108. So actually, that we were selling for a premium, which is quite impressive, right? So I think I'm gonna use it. So what I'm gonna do, gonna show to you what I need to do. Just a second, I'm gonna just open the Excel file here, and I'm gonna show to you exactly what I need to do. So gonna go up. I'm gonna just make it a bit bigger so you can see exactly what I'm doing. I'm gonna press here. So right now what I have 73,780. So 73,780 contracts. That translates exactly into 1.1834, right? So that's exactly what it is, okay? And I need to do the same, but I need to sell more. Why? Because the Bitcoin price here for these dates here, let's gonna go over here. Sorry, now I have to go over here, click over here. So we have the Bitcoin price for this expiration date 62,322. So 62,322, and here's going to be 62,422. Okay, so it's going to be 62,422. Right, so that's exactly what it is. So let me just gonna delete it here, and I'm gonna do this, divide by this. Right, so that's what it is, and now I have to do this times this number here. Sorry, this is going to be here. So okay, so I have to purchase $73,780,000 in BTC. Sorry, yeah, in contracts, and I need to sell 890 $73,898. So there's a bit more. The difference is the premium that we're selling the products for. So I have to sell 120 more contracts than I'm buying for, right? So what I'm gonna do, okay, so what I'm gonna do, I'm gonna go over to the strategy. I'm gonna go over here. I'm gonna click here because I'm selling for an even higher price. So the difference is $96 between the two products, but I'm gonna sell by 106. So I'm gonna click here. The number of contracts, let me just gonna over here. It's going to be 73,780. Okay, so I'm gonna go here. I'm gonna go here 73,780, and I am going to, I don't want to reduce, I want to sell it, right? So that's what I want to do. I want to purchase the 28 and I'm going to sell it. So I'm going to click over here and I'm going to do it. And the difference, the 120 contracts that I have to sell as a difference because of the price spread between one product and the other, I'm going to do it manually. Okay, so that's what I'm going to do. So I'm going to click over here. I'm going to sell. So I'm selling the July and I'm buying this one here. I'm going to create an order. That is done. So let's see how my position looks like now. I'm going to go over here. Oh, I won't bought 50,000 because I don't think they have the whole thing right. So let me go over here. Yes, so I have to do the rest. I have to sell a bit cheaper the rest. So it's going to be 23,000, right? So that's what I have opened. So let me just gonna do it right now for 104. And I'm gonna sell it. And there we go. So I think now I rolled the entire position and I rolled for, yeah, there we go. So we rolled the entire thing. But now I need to sell an extra 120 contracts. What I'm gonna do, I'm just gonna do it manually. I'm gonna go over here. I'm gonna click on BTC. We're gonna go to 5th of July and I'm just gonna sell it manually. So just gonna get a price. I'm gonna sell 120 like this and I just post and sell it. So we're gonna leave a standing order. I hope to get executed pretty soon and I will have roll my position. So that's one way I do it, and that's the easier way to do, and how, because you have the products ready for you. But usually what happens is that the market price is higher than the bid and ask price. So it can be by 10%. So I don't usually do using this feature of the website. What I usually do, I have a Python code in PyCharm that does it for me, right? So I have the setup here where I choose the first and second leg, and then I just roll my position. So I didn't need to do it today because I was able to roll my position for a more expensive price than the market price, the difference between the two contracts. Okay, so that's it for today. I hope you have enjoyed, and I look forward to seeing the next one. Have a nice one. Bye.